On Tuesday, the end of the business day, both the S&P and Nasdaq closed at their all-time high. What does this mean? This is Agustin Hernandez. Before we begin, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on the examination of past price movements and cannot predict the future. Technical charts referenced are subjective. No strategy can ensure success or protect against loss. International markets involve special risks such as currency fluctuation and political instability. These risks are often heightened for investments in emerging markets. International investing may not be suitable for all investors. Investing involves risk, including loss of principal. Sector investing will be subject to greater volatility than investing more broadly across many sectors and companies. On this week's agenda, both the S&P and the Nasdaq closed at their all-time high on Tuesday, April 23rd. What does it mean for both? One of the leading sectors is the tech sector. Is it still at the front? The Semiconductor group has had a recent strong run. Has it continued? The healthcare group took a hit 2 weeks ago. Has the losses continued? And finally, what does this mean? Finally, after 6 months from its old high, 2 months after crossing its 200-day moving average, and finally after 4 weeks after having a positive moving average crossover, the S&P closed at an all-time high. After the strong rally where momentum at the MACD was strong early in 2019, it has slowed a bit while it pushed higher. The strength of the daily MACD line shows that there has not been strong momentum on the S&P's slow march higher. But the key is that now we have a new high. Also, the MACD bars just turned green on the 23rd. Now, with the earnings season just starting, any positive outcome can start a new bullish run for the S&P. Another major index was able to close at its all-time high. The Nasdaq has had similar trajectory as the S&P. Like the S&P, momentum on its recent run has been weak. It is always a concern when prices rise without much strength in momentum, but at least the old high was passed, and that is a great sign. Also, looking at the MACD, we see the bars turn green again at the beginning of earnings season. Any consistent move higher, and we have the opportunity for a nice possible run higher. The leading sector of the U.S. markets is the tech sector, and while the S&P and the Nasdaq momentum was slowing down, the tech sector was beginning to gather strength. As we can see over the last week, the green bars were getting stronger. And with that recent strength, we see that price broke above the old line of resistance, which is represented by this blue line. Since then, it has continued higher. This leading sector has shown true strength. Now that we know that the tech sector has been and is leading the charge higher, let's look at the strongest group in that sector. This is the third week in a row where I discussed the Semiconductor group. Now, this group began its breakout in mid-March. It had a short pullback and has since gathered more strength. Also, we can see a true beginning upward slope in its long-term moving average, another positive sign of true strength. The MACD has been strong during the month of April. Unlike the other chart patterns, the strength in this rally has been like the strength in momentum during the beginning of the recent recovery rally. So within the tech sector, we have a leading group. Now, last week we saw the healthcare group got hit hard for several days. In fact, it fell hard below its 200-day moving average, which is not a healthy sign. But the reason as to why this sector had a major down week was not clear. There were no bad earnings reports, so it may have been a reaction to the news of potential policy changes such as Medicare for All in the future. Either way, the short-term damage to the sector was severe. These last trading days were obvious importance to this sector. And for now, it looks like the short-term bottom was formed. Now the key is, can it begin a recovery? Will it also join the S&P and Nasdaq on their march higher? This sector has had a short-term pullback before and recovered. Momentum is still negative, but will this sharp pullback just be noise? If the S&P and the rest of the US stock markets can begin a new rally, it will be helpful to have this sector join the party. Both the S&P and the Nasdaq closed above their old closing all-time highs on Tuesday the 23rd. Both indices have begun the first stage of a bullish run. The first phase is usually choppy as there is still some overhead resistance. But for now, according to my proprietary indicators, the Nasdaq is the strongest of the two as it has less headwind resistance against it. Its momentum has been stronger in a recent surge higher. Now, just because these two have begun the first stage does not mean there will be no volatility. It will have to continue to show strength even against some headwinds. And if it can graduate from there, then the bigger state of the stages, stage 2 of a bullish run, can begin. But that is usually 3 to 6 months after the beginning of stage 1 of a bullish run. It is great to see that the tech industry as well as the semiconductors continue their lead in this rally. Now, if the healthcare sector can lick its wounds and join, then we may be able to see a more consistent upward run for the US stock markets. Thank you for viewing my video. Please like and subscribe to my channel for future videos. Also follow me on Twitter at my handle HRSNYC.